Nobody knows, yet again, tariffs and uncertainty. Welcome to the Maverick Podcast. It's a memo from Howard Marks at Oak Tree Capital Management, dated April 9th, 2025. And the title is Nobody Knows Yet Again. So we're going to use this memo as kind of our guide to understand these brand new tariffs and what they might actually mean. Exactly. And that title, right? Nobody knows yet again. We're not getting definitive answers here. Marx is really upfront about the fundamental uncertainty that comes with these huge economic shifts. It's actually, I think, a pretty refreshing way to start. And for listeners trying to, make sense of everything without feeling overwhelmed, just acknowledging that uncertainty is probably quite helpful. And Marx isn't just guessing. He's got this deep well of experience navigating crises before. He even mentions his memos from, 2008? The global financial crisis. That one was also called Nobody Knows. And then, again, at the start of the pandemic, nobody knows, so he's dealt with this kind of fog before. And that history, it gives his perspective real weight, doesn't it? He's seen how things can pivot, how the expected stuff often just doesn't happen. So when he points to these new tariffs as the big catalyst for this wave of uncertainty, you kind of have to listen. And he had sort of touched on this administration's style before. Back in his February 2024 memo, 2024 in Review, the key word he used for the Trump administration was, uncertainty. So while the tariffs themselves are the big news now, the underlying vibe of unpredictability maybe isn't a total shock. It's not like President Trump's views on trade have been hidden either. Marx notes they go back, decades? At least to 1987, he mentions. But the key point here and what Marx emphasizes is the sheer scale of these new increases. That's what seems to be really shaking things up. So the direction, maybe not a surprise, but the intensity is, the magnitude feels like a real departure from established norms. Marx even draws this powerful parallel to how things felt back in 2008. That feeling that all the old rules are just out the window, that maybe the way we've done global trade for, 80 years suddenly doesn't quite apply anymore. Which loops right back to that title, truly nobody knows the final score here. We can't just look up massive global trade shift modern era in a history book. That's such a critical point for everyone listening to grasp. Even our standard economic models and theories, they haven't really been stress tested like this. Those models, they rely on past data and certain assumptions about how things work. But when you change the fundamental rules of the game this drastically, the reliability of those models, it just goes way down. So basically treat any forecasts with a huge grain of salt right now. Marx really hammers this home. He says understanding the probability of a forecast being right is crucial. And right now, that probability is, let's say, lower than usual. Just too many unknowns. But that uncertainty can feel, paralyzing. And Marx addresses that directly. He makes this vital point. Doing nothing is also a decision. It has consequences, too. He brings up that book title, When the Time Comes to Buy, You Won't Want To. It highlights how fear, when things look grim, can actually stop us from seeing potential opportunities. It feels very tactical right now, like everything's shifting underfoot. Marx even says deals we thought were settled, like the USMCA, could be back on the negotiating table. That level of flux makes any kind of long-term planning just incredibly tough for businesses, for individuals, for everyone. So to try and understand it better, the memo does dig into the stated goals behind the tariffs. It's important to look at the rationale being put forward. Marx lists quite a few objectives. Things like boosting U.S. manufacturing, encouraging exports, discouraging imports, obviously trying to shrink the trade deficit, making supply chains more secure, bringing production back on shore, deterring what are seen as unfair trade practices, forcing other countries to negotiate, even generating revenue for the U.S. Treasury. And as Marx notes, if you look at each one individually, they mostly sound like, desirable things, right? Putting a tax on imports could, in theory, lead to more stuff being made here and less coming in from abroad. But there's always a but in economics, isn't there? And that's where he brings in the second and third order consequences. Economics isn't like physics. It's not just A leads to B dot. He uses that great Feynman quote, "Physics would be harder if electrons had feelings." It's the human reaction, how businesses, consumers, other countries respond that makes it messy and unpredictable. So what are some of those potential messy consequences outlined in the memo? The negative ones. The memo lays out some pretty significant potential downsides listeners should be aware of. Retaliation seems almost guaranteed, from other countries hitting back with their own tariffs. And Marx seems pretty skeptical that these reciprocal tariffs, as they're sometimes called, will lead anywhere good. He thinks it's more likely to just escalate things. Then there's the big one: price increases, rising inflation. Tariffs are, at their core, taxes on imported goods. And those taxes usually get passed on to us, the consumers. And it's not just the finished goods imported from overseas. Think about American companies that use imported parts or materials. Their costs go up too. And those costs likely get passed on as well. Marx actually reminds us that between, 1995 and 2020, prices for durable goods, TVs, appliances, that sort of thing, actually fell quite a bit, largely thanks to imports. What would inflation have looked like without access to those lower-cost goods? So prices go up, people can buy less, which leads to potentially less demand overall. That can slow down the whole economy, maybe even tip it into recession, costing jobs here and, frankly, globally too. He gives an example: the 2018 steel tariffs, where a report suggests that the jobs saved in the steel industry were actually outnumbered by the jobs lost in industries that use steel, like construction or auto manufacturing. That highlights that tension between helping one group, maybe workers who lost jobs to globalization, and the impact on, everyone else who benefited from cheaper imported goods. It's a really tough balance, and another worry the memo raises is supply shortages. Because the U.S. just can't suddenly make everything it currently imports. Building new factories, training workers, that takes time. Years often. Plus permits, construction. It's a huge undertaking. And would companies even make those huge investments if they think the tariffs might just change again after the next election? That's a huge question, Marx highlights. The volatility is a major deterrent. He points out, NAFTA got replaced by USMCA. And now even USMCA is potentially being disrupted by these new tariffs. Creates a lot of uncertainty for long-term investment. Stepping back a bit from the immediate economics, the memo also talks about the bigger picture, the international consequences. And this is really interesting. He talks about how global trade, really since World War II, has generally been a force for, peace and prosperity. Through that idea of comparative advantage. The basic idea is, let countries specialize in what they do best. Italy makes pasta. Switzerland makes watches. Whatever it is. And this interconnectedness through trade, Marx argues, has been a really significant factor in the relative stability we've seen for 80 years. Trade barriers kind of mess with that efficiency and weaken those connections. And he mentions the U.S. role after World War II, that generosity stemming from enlightened self-interest like the Marshall Plan. The Marshall Plan, aid to Japan, foreign aid, educational exchanges. It wasn't purely altruistic. It helped build stable markets, create trading partners. The concern raised that antagonizing allies could push them towards other powers, maybe China or Russia. It could discourage foreign investment here in the U.S., and maybe even reduce the willingness of other countries to buy U.S. Treasury bonds. That Treasury bond point sounds really important. He calls it the U.S.'s golden credit card. That ability the U.S. has had to run large deficits because the rest of the world has confidence and is willing to buy U.S. debt. So if that confidence wavers, it could get tricky. If countries become less willing to buy treasuries, maybe because they're annoyed politically or worried about U.S. fiscal management, that could potentially force U.S. interest rates higher. It could even, long-term, challenge the dollar's status as the world's main reserve currency. A failed treasury auction. It would be unprecedented, and definitely something policymakers want to avoid. Marx raises it as a potential risk down the line if global confidence really erodes. Now, the memo does offer a bit of a counterpoint using Japan's auto industry in the 80s. It's a brief but interesting point. The idea is that, maybe the U.S. lost dominance in car manufacturing back then, but the economy didn't collapse. It adapted. It shifted to other things. Higher margin sectors like software, aerospace, things like that. So it raises the question, is it always wise to use policy to fight against those kinds of natural economic shifts to try and preserve specific industries indefinitely? So what's Marx's final take on these tariffs, his bottom line? He doesn't mince words. He calls the tariffs an own goal, like in soccer, scoring against your own team. He draws a direct comparison to Brexit, suggesting these tariffs could cause significant self-inflicted damage to the economy, to national morale, to alliances, to the U.S.'s reputation. And he notes the timing is kind of odd, right? The economy was actually doing pretty well just before this. He points that out. Just a few months ago, performance was good, outlook was positive, stock market was high, lots of talk about American exceptionalism. And now, boom, these tariffs could potentially push us towards a near-term recession and definitely higher inflation. And even if they get reversed later, some damage might already be done to relationships. That's the suggestion. Trust can be hard to rebuild once it's broken. Now, he does acknowledge some of the stated goals might be achieved to some extent. Maybe some increase in U.S. manufacturing over time, maybe some deterrence of unfair practices, perhaps some revenue for the Treasury. But he's pretty doubtful about others, especially reducing the overall trade deficit. Fundamental economics, basically. Americans like to buy stuff, and U.S. labor costs are generally higher than in many other parts of the world. Those factors make eliminating the trade deficit very difficult. And he makes a point about timing, too. That any potential long-term gains from things like onshoring manufacturing would take years and significant adjustment, while the costs, inflation, retaliation, uncertainty are likely to hit much, much sooner, almost immediately. How have the financial markets reacted so far, according to the memo? He notes the stock market obviously took a hit. In Oaktree's own markets, they're seeing investors demand more compensation for taking risks. But interestingly, there's also been a bit of a flight to safety into U.S. treasuries, despite the long-term concerns, so it's hard to tell if the market has fully processed everything yet. He basically says it's tough to know if the market reaction so far is appropriate, too much, or not enough. More uncertainty. And the Fed, what are they likely to do? More uncertainty there, too. It puts the Federal Reserve in a really tough spot. Do they cut interest rates to fight a potential recession caused by the tariffs? Or do they keep rates higher, or even raise them to fight the inflation caused by the tariffs? Can they even fight tariff-driven inflation effectively with rate hikes? Marx suggests it might be less effective than fighting demand-driven inflation. Raising rates might just add to the economic pain, without fully counteracting the price increases from the tariffs themselves. So bringing it back to Oaktree's perspective, how do they see this playing out for their investments? Well, being specialists in distressed debt and opportunistic credit, they kind of anticipate that this disruption could create more financial distress out there, meaning more companies needing their kind of help? More demand for the bespoke capital solutions they provide. He suggests it might even lead them to invest the capital from their latest big fund faster than they'd planned. And he ends by echoing his 2008 memo, paraphrasing Mark Twain. That idea that, in times of widespread fear and uncertainty, sometimes good assets get sold off too cheaply, along with the bad ones. You know, babies being thrown out with the bathwater, potential bargains for disciplined investors. Visiting Canada shortly after the announcement, emphasizing respect for allies. Kind of grounds the whole thing, doesn't it? These aren't just abstract economic forces. They affect real relationships between countries and people. So wrapping up this deep dive into Howard Marks's Nobody Knows Yet Again, the huge takeaway, it seems, is just that massive uncertainty. That's the headline. Nobody, not even Howard Marks, really knows how these tariffs will ultimately play out. The stated goals might sound reasonable on paper, but the real world, the global economy, it's just so complex. Human reactions, international relations, it's unpredictable. It's a powerful reminder to think beyond just the first step, the intended effect of a policy, and consider all those ripples, those unintended consequences that can spread through such a complex system. Which leaves you listening with something to think about. History shows economies adapt, right? Sometimes in surprising ways. So how might the global landscape shift and evolve in response to these trade policies? What unexpected challenges or maybe even opportunities could pop up down the road that we aren't even thinking about yet? That's the multi-trillion-dollar question, isn't it? Definitely something to keep mulling over as this all unfolds.